Hello traders, Nick Shaheen here looking at Sarepta. SRPT is the ticker. Heartbreaker, right, from not too long ago. I've done 2 videos on it before. This is the third one. I'm helping a few friends who got a couple stuck in and one bought the dip and just trying to manage the risks here. So nice day, up 11%, 12%. Maybe it was up earlier more. So how do I handle this? So here's the idea. I don't expect another up day like this one if I'm long. So if this pop fixes my problem, I get out and I change my risk. So if I bought calls and they were underwater and this pop fixes them, I would get out of it, me personally, and switch the risk to something that doesn't need a rally, like selling a puts below, because I know there's value below because they just shook the heck out of it, and so the value should hold. So I would sell a put or a put spread rather than chase upside to get me back whole. Same with the stock. If I own stock and this pop fixes me, if I double down on the way down or something and this pop brings me whole, I would replace my risk. I would either sell covered calls, that also works on calls, and stock. It depends on the level for the calls, and I would replace it with selling puts. So you've heard a stock replacement strategy. It's easy. So why, first of all, I want to get out? Because it's the pop. It's not magically stopping here. It's stopping here because that was the ledge from which it fell last. Onus is on bulls to fade a little bit and take it out. Then it would be like a cup and handle or inverse head and shoulders, whichever one. It's a neckline that they battle over and then they overcome. And if they do overcome it, they shoot to the next level. Unfortunately, it has so many of them. So every one of these levels is going to be a battle. So if I go out to a daily chart, then you can see a debacle here. Now it's coming back into this area of the debacle. First fell down here, and look at today's price, that blue line. It was exactly the day of the disaster. So need I say more? This is a place where it is not a place to start. Not an obvious place to start, even at the expense of it rallying without me from here. I'm not speaking against the company long term. I'm speaking against an entry with a short-term outcome. So if you enjoy red, or you don't mind red, I should say, then okay. But I don't know what moved it today. It's not an obvious entry point from the chart perspective. I'm not saying get out of the long. I'm just saying switch it to where it's not so dependent on more upside. You also have to keep in mind that the whole market is at all-time highs. What if the market has a tizzy? This one can't rally alone regardless of how good the recovery is for it. So that's my opinion. So a stock replacement strategy could work. What does that mean? It means I take off the upside hope and I sell puts or put spreads to bring in some income without a rally. In fact, the stock can fall and I wouldn't get hurt. So how does that work? So if I own shares at this level, that means I don't mind owning them lower. So for a person who can own and wants to own, that's super important, can own and wants to own the shares, to get long a stock, I would sell a put, meaning I would say to somebody, I'll buy your shares at 70. Pay me. They'll pay me now. And if it doesn't go to 70 and they don't give me their shares, I made money out of nothing. It didn't need to rally. All I needed to know is where it's not going. So if I'm confident that it's not going to fall below 70, I'll promise people that I'll buy it at 70 all day long. And if it goes to 70 or lower, I could wake up owning the shares. Big deal. It's at 83 now. I avoided, 20% dip, 17% dip. So it's not like it's a risky move. In fact, it's less risky. If I own shares here, I'm losing from here on down. If I sell a put down here, I'm not losing until it goes below that put by the amount I collect up front. So that's a stock replacement strategy. Do I have to do all of it? No. So if I have 100 shares or 200 or 1,000 shares, I'll split it. But I don't hope for more upside, especially after a big rally. So stock replacement strategy could work in this case. There are some tricks to like double down without any money out of pocket, but I think that needed to happen before now. And this spike will get you out of trouble. The concept is, and I won't get into it because it's pretty convoluted. Well, I'll mention it. So if I'm long 100 shares, I can buy a call, which adds another 100 share commitment on my, not commitment, opportunity on my part, and sell 2 calls above it. So in essence, I would create a call butterfly where I'm doing three new things, and adding the shares I own to make the butterfly. The butterfly is when I buy a call, sell 2 calls, and buy a call behind it, and it's like a thread the needle play where you want price to go to the middle one where you sold 2. Well, in this case, I own 1, I'll buy 1, and I'll sell 2 in the middle. So I own 1, basically I own 100 shares, so I own really 1 call. And then I'll buy a call, and I'll sell a 2 in between. And then if the stock rallies to the middle, I'm whole again without any money out, or little money out of pocket, as opposed to doubling down with a ton of money. So that's too late for that, because this pop would be used on after such a strategy is set beforehand. But going forward, maybe you'll put it in your bag of tricks, but learn it. So options are not that crazy. They're crazy if you are crazy. So they have the potential to lose money fast, because they have the potential to make a lot of money fast. So selling them makes more sense than buying them in a general statement, especially in a stock that has good fundamentals. So I don't know the story on it, but if I look at the financials, that probably tells it all. Revenues. Okay, so there's no disaster in the revenues. I don't know what the heck it was, why it dropped. Some headline of something didn't work. But the bottom line is the bottom line, right? This is the P&L, 2020, trailing 12 months. So, yeah, they're losing a lot of money, but the top line is still there. Valuations, 10 price to sales. It's not like a crappy stock by any stretch of the imagination. All right, hopefully this helps people manage the risk in Sarepta. I don't have a trade on it, so I don't have any disclosures. I don't know its fundamentals, so that part is the homework on you. I'm not recommending any trades. I'm saying if I'm long and I got a pop going into a prior potential pivot zone where it's going to be resistance, and that pop fixes my problem to a degree, I'd get out, say thank you for the pop, and I would, if I want to, stay long. I would replace my risk in a way where I don't need more upside. I just need it not to backtrack and make new lows. That would be my preference.